Workhorse Group, stock symbol WKHS, has been trading pretty flat lately. If we look at this chart, we can see for the past month, it's really been a narrow trading band. But during today's market trading session, I decided to take advantage of this situation and do something about it. I decided to take my Workhorse stock and... Before I get started, if you're new to my channel, welcome. I'm just a random guy publishing videos about my simple option trading. Be sure to watch this video to the end, and if you find it helpful or you enjoy it, please smash the like button. Okay, let's get started. I decided to include a special bonus in this video. I'm going to answer one of the questions that was posed to me from one of the viewers in the comments section. Be sure to watch this whole video so you can find out what they asked and my response to their question. While looking at the stock charts for Workhorse Group, stock symbol WKHS, I stopped on the monthly chart and noticed something. I saw a repeating pattern with each of the candlesticks that occurred within the 1 month time frame. I'm going to draw a couple lines on this chart so it's easier for you to visualize what I'm talking about. I'll add a lower line here, and I noticed that none of the candlesticks go below this line. So I'm going to call this the support line. And then next, I'm going to draw a line over the top here. And then I'm going to call this the resistance line. So now with the two lines in place, it's easier for you to visualize what I'm talking about. I'm seeing the candlesticks, which represents the pricing of the stock, trade between these two lines, the lower red line, which is the support line, and the upper green line, which is the resistance line. So what I noticed then is this pattern. Every time it reaches the red line or the support line, it tends to rebound and go back up. And then when it gets too high and approaches the resistance line, the price tends to come down. Now, there's no guarantee that this pattern is going to keep repeating over and over, but at least for the past month, that's what I've been seeing. And so now I'm going to execute a covered call based off of this information. Next, I'm going to assign values to these lines. I'm going to call the red support line $20. And the upper line, the green line, the resistance line, I'm going to call that $24. Because I own 100 shares of WKHS, Workhorse Group, I'm going to sell a covered call using these 100 shares as collateral. Because the stock price historically reaches $24 and then drops down, I'm going to try to set my covered call with a $24 strike price so that I can maximize the amount of premium that is paid to me in return for writing the covered call contract. So if the stock price exceeds the strike price on or before expiration, I'll be forced to sell these shares, and I'm actually okay with that because with my low cost basis, I'll make a good profit from this trade. And then I can take that money and start a brand new wheel strategy. So for my Robinhood account, I'm going to access Workhorse, and to start my covered call, I'm going to press trade and then trade options. And I'm going to make this a shorter covered call option contract and choose January 8th, 2021 as the expiration date. So basically it's a 1-week trade. And because this is a covered call, I'm going to select sell and then call. And then I'm going to choose the $24 strike price, which is here. Next, I'll specify one contract, and I'm going to set the limit price to 45 cents. So just to review my order so I've got it straight, I'm going to be selling a covered call for symbol WKHS with a $24 strike price and an expiration date of January 8th, 2021, roughly a week away. Now, for collateral, I'm going to be using the 100 shares of Workhorse that I already own. And in return for selling this option contract, I'm going to receive $45 in premium. My order looks good, so I'm going to swipe up to submit it. And then my order gets placed, and then after a few moments, my order gets filled. And I can see the on-screen notification here. So this is a covered call option contract that I sold. It has a $24 strike price and an expiration date of January 8th, 2021. So it's roughly a 1-week trade. And I'm using the 100 shares of Workhorse that I already own as collateral. And for selling this contract, I receive $45 in premium that's immediately deposited to my trading account. Now it's time for me to respond to one of the viewers who left a question in the comment section for one of my videos. This question comes from Trader OT, and it's in regards to a cash secured put option trade that I made. And Trader OT asked if I still get to keep the premium if the shares get assigned to me as part of the cash secured put option contract. And the answer is yes. A seller receives a premium whenever they sell a cash secured put option contract. When that option contract is purchased, the seller immediately receives the premium into their trading account. And then, no matter what the disposition is of the option contract, the seller gets to keep the premium. For example, if the stock price dips below the strike price and the shares get assigned to the seller keeps the premium. Conversely, if the option contract expires worthless, the seller still keeps the premium. A quick thank you to Trader OT for submitting this question. Now let's get back to the Workhorse trade. So what do you think the share price will be on January 8th, 2021? Is it going to be below my strike price and I get to keep my shares? Or will the price be above my strike price and my shares will get assigned away? Leave me a comment down below and tell me what you think. If you enjoyed this video, be sure you smash the like button. And as always, I wish you good luck and lots of success with all of your trades.